National Retail Properties stock, ticker symbol NNN. Is this the best REIT to buy right now? NNN is nearly flat year to date, which is pretty interesting since the overall market, the S&P 500, is up 4% year to date. On the 9th of February, National Retail Properties presented their quarterly results, where they beat on both FFO and revenue. The reason why people love NNN is because of the dividends. Dividend yield sits at 4.8% and they grew the dividends for 32 years in a row, which is very impressive. But does this mean that NNN stock is a buy at current prices, or is it a dividend trap? Well, in this video I'm going to show you real quickly what NNN does, the most recent earnings, the fundamental analysis, dividends, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does NNN do? National Retail Properties is a real estate investment trust that invests primarily in high quality properties that are subject to long-term NNN leases. If we dive in the most recent quarterly report, we see that revenue is up roughly 6% year over year, which looks pretty decent to me. One of the most important metrics with a REIT is the FFO. In here we see that FFO went up from 0.75 to 0.80, which is an increase of roughly 6% to 7%. So this is in line with revenue, which comforts me a lot. This also shows me that dividends are very well covered since this sits at $0.55 per share, so that's also very nice. In the 2023 guidance, we see that they expect to deliver a 3.19 to 3.25 AFFO, which is only a small increase from 2022. They also expect to do 500 to 600 million in acquisition volume, so both numbers are pretty interesting. When we check some fourth quarter information numbers, we see that, as previously said, dividend payout ratio is at 67%, which is pretty average for a REIT. But another important metric is the occupancy rate. Right now it's sitting at 99.4%, which looks really good to me. And the last important number in this list is the 30-year average annual return of 11.8%, which is also pretty nice. According to the investor presentation, the strategy of NNN is quite simple. Long-term single-tenant retail properties where there is no focus on malls or strip centers. They are avoiding retail categories that could be hurt by the e-commerce. And they maintain a fully diversified portfolio, so this looks quite good to me. Right now they have roughly 9.4 billion in total assets, more than 3,411 properties or 35 million square feet within 48 states. More than 380 national and regional tenants. And a very interesting number, the top 25 tenants represents 55% of the annual rent, which looks also pretty good to me. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. NNN is an 8 billion market cap company with a PE ratio of roughly 24. But since this is a REIT, I don't want to focus on the PE ratio but use the price to FFO. Price to FFO is at 14.7, which is fine by me. This could indicate that they are undervalued since it's below 16. Later in this video I will show you my 3 price targets for NNN, so make sure to watch until the end, since price to FFO is only telling a small part of the full story here. Revenue is at 773 million, and in this graph we see that revenue is going up quite nice and steady, which is something that I really like, of course. During the lockdown periods revenue was down a bit. After things cooled down, revenue went up again. Over a longer period of time we see that margins are going up. In the past couple of years margins were up and down. In the past 2 years margins went up quite steady again, so this looks pretty good to me. And it's the same story with the EPS. It has to be said that for a REIT this looks pretty good. Analysis expect EPS to increase at low single digits. The revenue is expected to grow also at low single digits in the coming years. However, after 2025 it's expected that they grow at double digits, which is quite interesting. Return on assets is sitting at 6.5%, which is the average for a REIT, and it's the same story with return on equity. Return on invested capital, the most important number here, is at 3.9%, which is not that high. But I really like it when the current ROIC is higher than the 5-year average, so that's very nice. Current ratio is going up and down a lot, but most recently it's looking pretty good at 1.6. So for now it's all good, but keep an eye on this number. And I prefer companies who can pay down at least a third of the total debt with total cash position. Right now total debt sits at 3.9 billion, while cash is at only 2.5 million. To me this doesn't look good and is something to keep your eye on. And it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to do acquisitions, buy back shares and all other things. In here we see that free cash flow has gone up and down quite a bit. It started to increase in the past couple of years, but most recently it's down, which is of course something to keep your eye on. If we check the shares outstanding, we see that it's going up quite a lot in the past couple of years. Usually this is not a good sign, but REITs issue new shares to raise capital and grow the business. So I'm not worried that much about this number. On top of that, most recently it's not up that high, which is pretty interesting. Next up are the dividends. Dividend yield is sitting at 4.8%, which is a really good number of course. Annual payout is at $2.20. And earlier in this video we saw the payout ratio is around 67% and not the 114% displayed here. That's because REITs use FFO to pay out the dividends. The 5-year average growth rate of the dividends is at 3%, which is of course very low. But since dividend yield is already at 4.8%, I don't mind that much. They grew the dividends for 32 years in a row, which makes them one of the few REITs passing this number. Very impressive. Overall a great looking dividend scorecard, but how about the historical returns? I decided to compare NNN stock with the overall market, in this case the S&P 500. Next to that I added realty income and Agree Realty, ticker symbol ADC. On the 5-year chart we see that NNN had the lowest return with 54% and was beaten by the S&P 500 by the slightest amount. Both realty income and ADC had beaten the S&P 500. On the 1-year chart we see some interesting things happening. NNN had a 10% return, which crossed the returns of the S&P 500 at -7%. ADC had the highest return with 14%. On the 6-month chart we see that NNN had beaten all stocks in this list by a small margin, which is of course very nice. On the 1-month chart we see that all stocks had a negative return, so that's also looking quite interesting. Bottom line, NNN didn't beat the S&P 500 in the long run, but it's only by a small margin. So could this mean that NNN stock is still a buy at current prices? Well, let's check the 3 price targets that I created using the Everythingmoney software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 4% because of what we saw in the earnings report, and also because of the analysis estimations. For the mid assumption I'm filling in 5% and for the high assumption I'm filling in 6%. For the profit margin I'm filling in 40, 42 and 44%. For the free cash flow margin I'm filling in 73, 74 and 75%. For the PE ratio I'm filling in 20, since this isn't a fair metric to use for REITs, but we have to fill it in. And the price to free cash flow I'm filling in 14, 15 and 16. Because I think there is some growth, but not at a high pace if you look at the numbers. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now NNN stock is at roughly $46. I hit analyze and we see a few green numbers. I'm only focusing on the discounted cash flow value and not on the earnings value, since this isn't a fair way to value a REIT. We have a low price target of $40, which is a small drop from where they are right now. A mid price target of $46, which is around the current stock price, and we have a high price target of $51.9. To me, the mid to high price target is the most justified here, so that means that they are slightly undervalued. My final conclusion on this stock is that I think I started to like them more and more after time passed by and I analyzed them more often. The results looks pretty steady and consistent. They are not focusing on high growth numbers but single mid-digit numbers, and increasing the dividends alongside with that. I really like the focus of the portfolio where there is minimal risk and high occupancy rate. In fact, it's one of the highest I've seen so far analyzing different REITs. I added this stock to my buy list and I think I will start opening a position very soon, since they seem undervalued and pay a great dividend. But remember to always do your own research and never fully trust on what I or the other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.